Hey traders, Lance here with the Future of Wealth. I want to go over what a typical trading day is like for me, what I like to look at as soon as I wake up in the market. So some people like reading the headline news and look to see if there's any analyst upgrades or downgrades. Me personally, I just like to see what did the futures do overnight because that's where we're experiencing the most volume. Pardon me, not the most volume, the most volatility, and where really the S&P is trading on that low volume. And then when the normal market hours open up, we're really not seeing that large of a range. We're seeing a tight range. For example, today the S&P futures gapped up 25 handles or 25 points overnight. And ever since 9:30 a.m. Eastern Time, the S&Ps have moved literally 1 point. Realistically, they moved about 8 points from high to low, but about 1 point change from the opening price here. So when I see stuff like this, a tight range, I will look to swing trade, not really day trade stocks out there. So when I swing trade, I like to look at my option time and sales. It just gives me all the positions I'm in. It gives me the time and sales of what traders are doing. Are they buying? Are they selling? How many contracts? Just what I like to look for, me personally, when I'm trading. And then I also like looking at the NYSE tick. This is probably the most important tool that I use in trading. And I normally don't trade the S&P that much, but I do know, obviously, the S&P 500 is going to or it's going to dictate where most of the stocks are going to trade. Obviously, if we gap up higher, S&P trades up, you'll have more stocks moving up. So when looking at the NYSE tick, it gives me what stocks are doing from their previous closing price. I like using the 5-minute or the 15-minute candle. So when we have negative ticks, it means stocks are closing lower from their previous price or previous tick. And when we have the tick moving higher, it means more stocks are trading higher than their previous closing price. Use positive 500, positive 800 on the ticks as very bullish, aggressive buying from the institutions, and negative 800 or below. You see how I have my lines drawn right here at negative 800 as funds, the large institutions, are selling stocks, moving stock prices lower there. So use that as a gauge. Sometime when the market's slow, you have to move to 500 positive or negative. But usually when you have a lot of volatility, use positive and negative 800 to see what the large players are doing. And pretty much, I'll go out for lunch maybe for an hour or so if the markets are slow. But pretty much every day, I'm here from 9:30 a.m. to the closing bell, monitoring the stock market, looking for trades, and trying to make the most money possible. Thanks, everyone. Let me know what time of day you like to trade and what you like to look at during the market hours.